Hi guys, this is Hector. Welcome to a new video of my Forex trading course. In this video I'm gonna be briefly explaining what the setup chart and what the trigger chart actually are and the uses I make of each of them, okay? Firstly, I'm gonna begin with the setup chart and then I'm gonna move on to the trigger chart so you guys hopefully understand the difference between the both of them, okay? Okay, let's begin with the setup chart. The setup chart has, in my opinion, or the way I personally use it, four main uses, okay? Four main reasons to be used. That's trend establishment, then seeking levels of support and resistance, also trying to spot price patterns, and of course also defining what my target areas are going to be for any particular trade should I decide to indeed take a trade, okay? All right, let's begin for the trend establishment. This means that, well, the setup chart is a time frame where all the moving averages fall or fulfill the conditions we studied on the first chapter of this course, okay? Remember, all of them moving in the same direction, pointing in the same direction, no crossover, meaning that they are more or less parallel to each other, price nowhere near the 100, price harmonically swinging off the dynamic area of support or resistance, etc., etc. You guys know about those conditions already. So my setup chart will be the time frame where all those conditions apply, okay? I'm not going to be looking for moving average parallelism in the trigger chart or in any other time frame. Wherever they apply, okay, whatever time frame those moving averages are falling in order, basically all the ducks are in line, and therefore we can establish that we are in a trending scenario. That's going to be my setup chart, okay? Also, as I was saying, I use the setup chart in order to find what my main levels of support and resistance are, okay? Let's assume we are considering this downtrend scenario. Perhaps we might be interested in searching for short entries only, of course, since we are in a downtrend. So I would use this 4-hour time frame in order to search what my levels of support and resistance in this trending scenario are, okay? For that reason, let's assume live price chart was down here, this particular swing, and well, just as we see price retracing back to the dynamic area of resistance, well, we're going to be looking for different elements coming together in order to base our entry, okay? So we begin drawing our different elements of technical analysis, okay? Firstly, we draw, of course, horizontal levels, right? In this downtrend, we can clearly see that we have few swing highs and few swing lows, which are going to be my levels of horizontal support and resistance. Also, we would take into consideration round numbers, etc., etc. But I don't want to cluster my chart with too many lines. You know, this is basically a video explaining the theory, so I don't want to make it too complicated. All right, okay, so I've established my levels, my different levels of horizontal support and resistance. In this case, since remember we were looking at this part of the chart, well, this line is definitely too far, right? It's definitely too far from market price, so I'm just gonna ditch it. It's just way too far. Like I say, I'm not interested in this one either, or in this one either. The only one I could possibly be interested in is this one, okay? But anyway, if price is to reach this level, we will see a very heavy retracement, so, and getting near the 100, so I'm not very sure I want to use that one either. Nonetheless, it's good to have a mental note of where that trend line is, okay, what price level, but like I say, I'm not sure I want to use that confluence of that support level, former support level, now once broken, perhaps working as resistance. I'm not sure I want to use it in order to base my entry. All right, fair enough. Let's see what other elements we have around here. All right, well, we have a trend line here. Let me mark it in blue. There we are. We have a downtrend like that. Let's draw some Fibonacci's. There we are. So, all right, around this area, I can see that, well, we have around this area, if, as I was saying, let's assume live price was somewhere around there, I can see that I have, first, I have, of course, the dynamic area of resistance in this case, since we're in a downtrend, which is always our main area, I mean, our main reference as far as finding confluences of support and resistance. So we have the dynamic area of resistance coming around there. Also, we have the downtrend line, all right there, and also we have the 50% Fibonacci retracement. All of them coming together at that area. Okay, so we have three elements of support and resistance in this case, since we're in a downtrend once again, coming together at this price level. Okay, right there, 211.90 actually. 212, because it's a little bit above. Of course, we would also count the round number as another factor. So it's three of them plus the round number, four different elements of resistance coming together within very few pips within the dynamic area of support and resistance. As you guys know, that's the area I like to base my trades from. So yeah, definitely it's an area I like to keep an eye on. Okay, so I make a mental note that the 212.00 area, okay, round number, this one actually I'm gonna mark it in deep green. Okay, deep green right there. That's an area. And now let me remove all my different lines to clean up my chart. So I know that around the 212.00 level, okay, I have a very strong element, different elements of confluence of resistance, sorry, making a strong confluence of resistance at that level. So that means that should price retrace back to that level, I wanna be looking for a possible short entry if that level holds. Okay, of course, if it breaks through, I'm not gonna be interested anymore. However, if price does hold, okay, if this level of resistance holds the retracement and price begins to turn around, I'm gonna be definitely interested in search for short entries. Okay, so that's another use I make of the 4 hour of the setup chart, in this case the 4 hour time frame, which is to search for my strongest levels of support and resistance. Good. Fair enough. We've so far determined whether we are in a trending scenario, which we are, and also we've determined what's our strongest level of defense in this downtrend, which we already have. It's the 212.00 in this particular case. This is just an example. Okay, I'm not really. I don't want to comment on this particular trade or not. This is just an example, so you guys understand the theory. Okay. Also in the setup chart, I like to search for price patterns. Okay, perhaps you know, all those patterns that we've studied on the chapter number 2, I think it is. Remember, we were studying triangles, ranges, and flag formations. Okay, those are the main 3 price patterns I like to keep an eye on when it comes to base an entry of a breakout of those congestions area. Okay, in this case, let me try to see if I see any price pattern here. We had a flag formation right there. Okay, you see that flag formation, but that's already gone. Okay, remember that we are only considering, I mean, we are assuming that this is current market price. Well, we have some sort of very steep flag here, another flag there. You know, so-ish, not the cleanest of all flag formation, but nonetheless, you get the idea. If I was to find I don't know, let's assume a triangle here, which is not the case. This is, or let's say a range, okay? This is not the case, okay? This is not really a range, but anyway, let's assume for the sake of it, I would like to search for those formations on the setup chart, okay? In my opinion, there is not really much point to search for price formations in non-trendiness scenarios, and since we determine that the trend is to be established on the setup chart, which in this case is a 4 hours time frame, I will only look to search for price formations on the setup chart, okay, meaning on this 4 hour time frame, okay. So like I say, don't go about trying zooming out into the daily or zooming in into the 15-minute chart or something like that, searching for triangles or ranges or none of that. You want to keep things simple, and you want to search for price patterns in the time frame they are the most significant, which is in the time frame where the trend is actually showing itself, okay, in this case the 4 hour time frame. So this is a time frame. If there was if there was any price pattern here, either range, triangle, flag formation, this is a time frame you would like to see them, okay? You would like to search for them, okay? And well, finally, price targets. If we are actually to take a trade on this. On this particular setup, okay, on this particular trade, we will establish our possible price targets on this 4 hour time frame as well, okay. I don't want to get into price targets, okay. I don't want to get into that subject, since I dedicate a whole chapter to exits and stop losses and price targets, but nonetheless, just keep in mind that if I was to, I don't know, let's assume I entered here, okay, if as price stand around, let's assume, like I said, this is not a real case scenario, it's just to explain the theory of the setup chart and the trigger chart. If I was to take an entry here, I would determine my exit levels as per the setup chart, okay. For example, here we have a previous swing low. Perhaps I would like to exit half of my position as we reach the previous swing low there, okay, and then perhaps let the second half of the trade, exiting half of the lot size out here, and let the second half run for further profits. But like I said, I don't want to get into that. You will study all about my price targeting policies in the appropriate chapter. Okay, so those are the 4 reasons, or the 4 uses I make of the setup chart, okay. Once again, recapping really quickly: trend establishment, the most important of all. All right. Once we've determined that we are indeed in a trendiness scenario, then in that time frame, I will search for price patterns, levels of significant support of resistance, especially confluences around the dynamic area of support and resistance, guys. And finally, if I am to take an entry, if I eventually take my entry, I will also define my target areas also off the 4 hour time frame, or whichever time frame is my setup chart. Okay. All right, guys. Now I'm gonna be moving into the trigger chart. For that case, I'm gonna mark a horizontal line right here. So I'm gonna be zooming now. Let me delete all these text boxes up there, and this one I'm gonna be changing it to the trigger chart, since I am now gonna be listing the different uses I make of the trigger chart. Okay. Alright, let's zoom into the trigger chart now. Since this is the 4 hours time frame, remember that we are looking into the 4 hours time frame. I like to only zoom in 4 times the time frame I establish as my setup chart. For example, sorry about the confusing wording of this sentence. you know, I'm not very proficient when it comes to speaking English. Anyway, if the 4 hours time frame is my setup chart, then I would zoom 4 times to a shorter time frame in order to establish my trigger chart. In this case, it would be the 1 hour time frame. Okay, that's rather obvious. If the 4 hours time frame is my setup chart, then I'm zooming into the 1 hour time frame for my trigger chart. If let's assume my setup chart was the hourly time frame, then I would zoom into the 15-minute chart. Or if my setup chart was the daily, 4 times a daily chart divided by 4 should be the 6 hours time frame, since they are 24 hours a day. But since most of the trading platforms, charting platforms, don't offer a 6-hour time frame, I usually zoom into the 4 hours time frame from the daily, right? So if the daily is my setup chart, the 4 hours would be my trigger chart. But anyway, in this case, the 4 hours time frame is my setup chart, so I'm gonna be zooming into the 1 hour time frame. Well, here we are in the trigger chart. By the way, I just cheated. Okay, I paused the video in order to type all these text boxes. But anyway, I'm sure you will be able to forgive me, all right? Okay, the trigger chart. So we are now in the 1 hour time frame, which, as I was saying, it's 4 times shorter than the 4 hours time frame. Of course, that's rather obvious, Hector. And in this case, or in any case, actually, I would use the trigger chart in order to search for, or in order to, pinpoint my entry, also pinpoint my stop loss, and also to follow price as the trade unfolds, if I took an entry, of course, as price unfolds in real time, in order to, basically follow my in-trade management. Okay, the in-trade management and the stop loss, all that I explain in their own respective chapters. I'm not gonna get into detail on that. I just want you to remember that that's all conducted, or it's based off the 1 hour time frame, in this case in the trigger chart. Okay, so as I was saying, the trigger chart, I use it first of all to pinpoint my entry. This is the swing. Okay, the swing top. Remember, we had our confluence of resistance right above us. Okay, price retraced back to that confluence. The dynamic area of resistance came around there in the setup chart, and from there we were searching for a bounce to the downside. Okay, the resistance area definitely held the price, the retracement. Price began to curl around, and now we are searching for our entry. Our entry, well, in this case, it came in the shape of a 1, 2, 3 formation. Okay, this being the aspect number 1, this being the aspect number 2, and this being the aspect number 3, with a retracement trendline breakout. Our short entry would have been there, and that would have been our stop loss. But don't worry, guys, you are gonna learn all about 1, 2, 3 formations in actually this video, this chapter that you are now at. Okay. Just to show you what the entry would have been. Okay, we have an 1, 2, 3 formation, trendline breakout. As we make new lows right there, that would have been our short entry, that would have been our stop loss, and well, bang, off it goes to the downside as expected, in the direction of the main trend in the setup chart. Okay, anyway, so that's for the entry and the stop loss. Okay, don't you guys worry, you will learn all about that in their own respective videos, chapters, sorry. Anyway, in-trade management. In-trade management is all about following price in real time, okay, as the chart unfolds, as your trade unfolds, in order to spot possible signals of weakness in your trade in order to, well, exit out as soon as possible, minimizing your risk, okay, and therefore your potential loss. In this case, we will be following price in the setup chart, trying to spot different signals, like I say, of early weakness, indicating us that price perhaps might not reach our final target, okay, and therefore we may want to exit the position before manually close the position before taking out our final target, okay, just like I said, in order to minimize risk or a potential loss. All right, in this case, well, I think intraday management is explained on chapter number 6, but very quickly I will explain how we keep on breaking different levels of support in the setup chart, okay. Price keeps on making lower highs, okay, keeps on breaking levels of support, always in the direction of the trade and in the direction of the trend, which means that, well, so far so good. From an in-trade management point of view, the trade is still healthy, okay. We have not taken out previous levels of previous highs on the setup chart. Price is actually very harmonically swinging up and down, making lower highs and making lower lows. All right, breaking levels of short-term support in the setup chart, and therefore, basically the trade is quite healthy, okay. It's definitely moving in our direction. There is no need to close the trade so far. Chances are that it will hit our final target as price keeps on breaking levels of support in the trigger chart. All right, that's another use that I another reason I like to use the trigger chart, recapping a little bit, entries, okay, pinpointing our entries, also stop losses in order to keep them as small as possible, and finally following price in real time as the trade unfolds, in order to, like I say, identify possible areas or possible signals of early weakness, okay. Alright guys, that's basically all for this video. Like I was saying, it's just so you guys understand the difference between the setup chart and the trigger chart. It's a very easy concept. Basically, you establish the trend in the longer time frame, and then you zoom in into the shorter time frames to manage the trade, to get the entry, to get your stop loss, to follow it in real time, etc., etc. Very easy concept to understand. All right, folks. That's all for this video. As usual, if you have any doubt regarding this concept of setup chart versus trigger chart, don't hesitate to send me an email. I will very gladly answer back all your questions, okay? Bye. Hi everyone, this is Hector. Welcome to a new video of the course. In this video I want to explain how I read price action around the 50 simple moving average in order to in order to see early warnings of early signals of warning as of how the trend might be running out of steam, okay. Right now I'm showing you a chart of the GBP against the Swiss franc of the 4 hours time frame. We can clearly see that we are in an uptrend, okay, making higher highs and higher lows, as I am marking right now on my screen. Again, very clear uptrend, but I was saying in the first video that not only we've got to determine whether we are in a trending market or not, also we've got to determine whether we are in a healthy trend or not. It's very easy to see whether a chart is trending or not, but it's not so easy to determine the health of that trend, okay. Like I say, in this case, clearly we are making we are clearly in an uptrend, okay. We are in a channel. I can clearly, clearly see that well, we are moving within an upward channel, okay, making, like I say, higher highs and higher lows, swinging up and down within the channel. But like I say, it's not a healthy uptrend, and therefore it's not an uptrend you or I personally, according to my system, it's not an uptrend that I want to get involved with. And I'm going to show you how to read price action around the 50%. The 50 simple moving average, sorry, in order to realize in advance that well, perhaps we might want to let this trend pass by without taking any trade. As usual, my 50 simple moving average is marked in red, okay? As you can see, most of the time we see the 30 moving average above the 50, the 30 above the 50 and the 50 above the 100. We have a small crossover there, but let's for the sake of this video, let's not pay any attention to that, okay? I just want you guys to focus on price around the 50 simple moving average. As you guys know, in a perfect trend in a scenario, I like the 30 moving average above the 50 and the 50 above the 100, and price swinging off the area between the 30 and the 50, okay, what I usually call the dynamic area of support and resistance. Well, since this is an uptrend, that means the area between the 30 and the 50 is the area of dynamic support. In a downtrend, this being the 30, this being the 50, and this being the 100 simple moving average, I like price, you know, all the retracements to be held by the dynamic area of resistance, meaning the area between the 30 and the 50 simple moving average. All right. As you guys know, as I explained on my first video, I like seeing price spending most of its time above or below, depending on, once again, whether we're in an uptrend or a downtrend. But at any rate, I like the price to be contained in the right side of the 50 simple moving average. In this case, since we're in an uptrend, I like price to spend most of its time above the 50 simple moving average. In this case, we can see that this is the case. Okay, we have few pierces. Okay, very brief pierces above the 50. That's all right. We get 1-2 closes below the 50, but immediately after we shoot again up to the upside. This is also all right. Just one quick breach below, no worries. 1-2 closes below, but immediately after, once again, it shoots above. But at this time, okay, the trend begins to show some weakness. Okay, we begin to see how the bulls are not totally in control of this trend. Every time price retraces, the bears actually show their teeth. Okay, they show the claws, and well, they've breached quite heavily. They show the close, and well, they've breached quite heavily into the 50. Okay, this is a serious dent into the 50. All right, it's gone almost all the way down to the 100. It's not like here, it's not like here, it's certainly not like here and here, where the bulls they had a quick attempt onto the 50, but they just couldn't really breach it. Okay, for very brief moments there and there, but immediately after, the bulls regained control and muscled price once again to the upside. However, this is a different case. All right, that's quite a dent into quite a bite into the 50 simple moving average. It's an early warning, all right, that this trend might be running out of control. Nonetheless, we have a new swing up. Okay, we take out the previous swing high, we make a new high into the uptrend. So from a technical point of view, we are still in an uptrend. However, we see that on the next retracement, we actually once again, all right, have quite a bite into the 50, all right, almost once again almost to the 100. We almost touched the 100. At this time, it's been 2 following swings in a row where the dent, the bite into the 50 has been quite strong, okay? It's been like, I always say that the 50 is like a cat, okay? You can cuddle a cat, but you don't want to mess too much with a cat, because finally, if you tease a cat for too long, the cat will scratch you back. Well, it's just a silly analogy, I know, but it's actually a valid analogy, because when you tease the 50 simple moving average for too long, eventually it will bite back at you, okay? Basically, the 50 simple moving average is like the 61% Fibonacci retracement, the 61.8% Fibonacci retracement. If you draw your Fibonacci's for this swing, okay, we can clearly see that the retracement, this is the 61.8% Fibonacci. The retracement actually probably goes all the way down to the 76% Fibonacci. I am not too keen on the 76 Fibonacci myself, in my opinion. The retracement is too deep into the trend. Yes, sure, you have a whole new swing to the upside, but the retracement goes almost all the way back to the starting point. Okay, this is the starting point, the place from where the swing sprang off, and the retracement goes all the way back down to where it all began. All right, I don't like that. Okay, I like the retracements to be held by the area between the 38 and the 61%. Anything beyond the 61% means that the bears in this case are just showing too much strength. The bulls are still in control. We are definitely making new highs at every consecutive swing, but the bears are definitely not beaten. Okay, are not beat. The bears still are showing quite a strength, and sooner or later they will regain control of this market. Okay, and the actual control, the actual turning point comes at this final swing. Okay, not only the bulls cannot outtake the previous high, but moreover, once again, okay, the bears drive price all the way through the 50, and this time around they do knock the 100. Okay, they do slap the 100 simple moving average. They couldn't make it here, they couldn't make it there, but finally we did. The bears are once again back in the game. All right, and actually, on this, let me take off this Fibonacci retracement. Finally, they make a new low. All right, you see this lower low and a lower high. That signifies that the trend is, perhaps it may not be over, but indeed it's weakening. Okay, it's run out of steam, at least for the time being, and we could see that in advance. From the previous swings. All right, the 50%, the 50 simple moving average has been breached for just too long. Okay, this is alright, this is alright, this is certainly alright, but like I say, this is not alright, this is not alright, and finally, well, you know, as soon as you see that the swings begin to dip, dip their toes too deep into the 50 simple moving average, you know, let the early signals of warning, like the alarm bells warn you in advance that something is just not quite right. Okay, the bulls that push price all the way up here gave up too much gave up too much territory back to the bears. Once again the bulls scored a goal, but the bears were not dead. Okay, the bears drove price down almost to the beginning of the swing. Okay, just as in here, almost to the beginning of the swing. That's not nice. All right, you don't want traces to go all the way far down to reach the 50 for that long. Okay. At the beginning of the swing, we definitely saw a very nice swing up. Okay, then a retracement, but the bulls, okay, managed to drive price so far up high, that when the retrace took place and the actual retrace ended, the bears couldn't quite gain back all the land that gave up to the bulls. Okay, in fact, if I draw my Fibonacci's from the swing low to the swing high, I can see how the 61% Fibonacci retracement, which in my opinion is something like a last line of defense, all right, was not taken. Okay, was not breached. The bulls' last line of defense is still intact. All right, that's all right. Just as you can see here, the 50% Fibonacci, sure, we had a quick pierce below, but immediately after we shot to the upside once again. That's all right, but this is not all right anymore. Like I say, if we draw our Fibonacci's back to that area, all right, back to this area, well, first of all, we definitely breach below the 61, and we almost get back to entry levels, meaning the 100% Fibonacci retracement, meaning the beginning of the whole swing, and almost to the 100 simple moving average. All right, here we have early warnings. All right, early warnings that this trend just don't have steam enough. Okay, we might be running out of petrol here, and despite the fact that, at least from a technical point of view, we're still in an uptrend, still making higher lows and higher highs. All right. Sure, we are in a technical in an uptrend from a technical point of view, but that's not the question. The question is, how healthy is this uptrend? Is this a trend that it's strong enough for me to risk my money at it? In my opinion, all the way here, here, and here, sure, it's a high probability chance that the uptrend is gonna still be strong. But at this time, like I say, I'm not even gonna pay attention to the crossover there. Okay, but at this time, price biting too hard into the 50, almost to the 100. For me, it would have been time at this time to not search for a long entry anymore. Okay, once I see these two bites too hard into the 50, it was certainly a warning enough for me to cancel the whole thing and stop looking for long opportunities here. In fact, well, if I keep scrolling to the right side, well, you can clearly see that we are no longer in an uptrend. We are now ranging sideways. The 50 simple moving average had warned me in advance. The 50 simple moving average is my friend. Okay, it tells me when to stop messing around. All right, and when to stop considering any possible entry, because the trend is losing strength. All right, and this was very clear. All right. Here and here I had my final my early signals of indications of trend weakness. I had the confirmation once we made a lower low and lower high, when of course finally we got the crossover, the 100 simple moving average was breached, the whole thing was a mess. Okay, this was not an uptrend anymore. In fact, you can clearly see that we are now rather bouncing up and down within a sideways channel. We're not trending anymore, guys, we're now moving sideways, and that was like I say, that was signified in advance with the 50 simple moving average, okay, being breached by way too long, okay, not like here, here, or here. I'll tell you what, guys, perhaps it would be a good time for you to pull out your own charts, search for trending scenarios, search for trending scenarios where the moving averages plot on your chart the way I like them to be plotted, all of them parallel to each other, all of them pointing in the same direction, no crossover whatsoever, all of them in order, etc., etc. And you will see by yourself that when the 50 simple moving average is breached by a long way, all right, like here, almost getting nearer and nearer to the 100 simple moving average, you will see that there are chances that you will begin to move sideways rather than trending anymore, okay? Like I say, it's important to follow price action around the 50. The 50 simple moving average, like I say, it's similar to the 61.8 Fibonacci retracement. You don't want your retraces to breach for too much the 61 Fibonacci retracement. It means that the retracement is getting too strong. The bears, in this case, since we are in uptrend, the bears are regaining strength, okay? They are not totally dead at all, okay? The bulls may be running out of steam, they might be exhausting, and the trend as a whole might be, like I say, running out of petrol, okay? And this is the case. As you can see now, I can clearly draw a downtrend. We're basically moving sideways. The moving averages are flattening, all right? And all that, all right, we are making lower lows, lower highs, etc., etc. And that, once again, I repeat, it's important, was signified in advance by the 50 simple moving average, all right, or rather by price biting too hard, quite a deep dent into the 50. You don't want that, all right? The 50 simple moving average is not to be messed around with. Okay, always remember the cat. Okay, you can cuddle it. Okay, cuddle the cat. I keep on saying the cat analogy on my videos. I know you guys probably think it's a silly analogy, but it's quite useful. Okay, just keep it in mind. The 50 simple moving average. It's our friend. It lets us know in advance when things might be turning against us. Okay, and these were the signals that something was beginning to smell, not that nicely anymore. And you can clearly see that finally, we've begun to move sideways. Okay, the uptrend is no longer. Now we're ranging, and like I say, we saw that in advance here and here, nearing the 100. All right, guys, that's all for this video. Like I say, just try to pay attention to the dynamic area, meaning the area between the 30 and the 50. If the area between the 30 and the 50 is holding the retracements, fine, you are good. As soon as you begin price breaching below the 50 simple moving average, getting too many bar closes below, you know that something is not quite right. Okay, as soon as you see price diving all the way down, or almost all the way down to the 100, you see that something is not quite right. Okay, guys, keep an eye on that. It's important. It might save you from entering trades. Okay, you might think that this is still an uptrend, and in fact, it was the end of the uptrend. All right. Okay, guys, that's all. Keep an eye on the 50% and the 50 simple moving average. It will keep you away from many losing trades. All right, guys, that's all. Bye bye. Hi folks, welcome to a new video of my Forex trading course. I hope you're enjoying the course so far. In this video, I'm going to be talking about 1, 2, 3 reversal formations. a reversal formation, it's basically a price pattern that may indicate a possible change in the direction of price during the following bars, okay? In the in the imminent future. Since I am a conservative trader, I'm only gonna be taking all those conditions, all those reversal formations that indicate that price might be turning around in the direction of the main trend. Meaning that if we have an uptrend, such as it is this case, I'm only going to be taking 1 to 3 formations, or actually any reversal formation that might indicate that price is going to turn around to the upside. Okay, basically the way I treat reversal formations is at the end of a retracement of a swing. Okay, as usual, when you are in an uptrend, you have different consecutive swings. Okay. In the direction of the main trend, hopefully taking off from the dynamic area of support and resistance, which, as you guys know, is the area I like to base my entries from. So the way I treat reversal formations is at the end of every swing has 2 parts. Once you have the impulse and then you have the retracement. Okay, you have the impulse and then you have the retracement. Impulse, retracement, impulse, retracement, etc., etc. Okay. Obviously, in order to have a trend in a scenario, the impulse part of the swing must be longer than the retracement part. Otherwise, obviously, it wouldn't be a trend. Okay. So the way, like I say, I treat reversal formations is at the end of the reversal part of the swing, in order to spot weakness in the retracement and an indication that the retracement might be about to finish, and therefore a whole new impulse might begin in the direction of the main trend. Okay, basically what I do is, as price is retracing back, to the dynamic area of resistance, what I search for, of course, I mark my strongest levels of support and resistance, and then as price retraces back to those levels, I zoom into the short time frames and I search for reversal formations in order to identify a possible change in the direction of the future price action, and therefore enter a long entry. Long if I am in an uptrend, as in this case, of course, enter a long entry, hopefully riding a new swing to the upside. Okay, there are a few reversal formations that I trade. There are actually many reversal formations. I personally trade few of them. I'm going to be explaining all of them throughout this chapter, but in this particular video I'm only going to be talking about 1, 2, 3 reversal formations. Okay, firstly, let me talk about the theory, and then I'm going to show it to you on a real chart. Okay, a reversal formation, a 1, 2, 3 reversal formation is made out of 3 parts. Obviously, that's why it's called 1, 2, 3 formation. Let's assume we have, in this case, a retracement down, such as in here. Okay, let's assume we take this part. Okay, or this one. It doesn't matter, any retracement. Okay, in the shorter time frames, we will see price. Actually, I suck at drawing with my mouse. 1 second. We usually see price swinging down, okay, towards the dynamic area of resistance, and what I like to see, like I say, is a reversal formation of that area, indicating a price change to the upside. All right, fair enough. So as I was saying, we usually have price swinging up and down. Well, a reversal formation is formed by one last swing to the downside. Okay, one last thrust to the downside, then another pullback to the upside. This final thrust bottoming out or topping out at the dynamic area of resistance and around a confluence of different elements of resistance coming together. Basically, price bangs onto that area, retraces from there. The bears attempt another attack to that level, but they cannot quite outtake the previous low. Okay, they just they are outtaken by the bulls. Okay. And from there, price shoots to the upside in the direction of the main trend, as indicated in the setup chart. Okay. Once again, let me make the let me draw that once again. Here, let's assume we are in an uptrend, and this is our level of support. Okay, price in the previous swings, we create a whole new impulse to the upside, and then the retracement part begins. Okay, price moves up and down as it retraces, slaps that area of resistance, the dynamic area of support. The dynamic area of support comes around there as well, and the retracement bottoms out at that area. We retrace back from there. The bears try to unleash another attack to that area, but they just don't have any more the energy. Okay, they are dying out in momentum. The bulls are regaining to take control of the situation, and from there, price continues with a whole new impulse in the direction of the overall main trend. Okay. I hope that was clear enough. Obviously, if we were in a downtrend, let's assume we have here our main level of resistance, the dynamic area of resistance coming around there. We have a new swing, a new impulse to the downside. Price begins to retrace up to that level of resistance. The bulls have one last attack, topping out. They bang onto that level. They get rejected off that level. They try once again, but they cannot quite outtake the previous thrust, and from there, bang. They basically give way. Okay. The bears in this case win the battle, and a whole new impulse is created. While we are trying, or I'm gonna try to explain to recognize those reversal formations at an area of decision taken. Remember, guys, that reversal formations are only significant if they take place of an area of support or resistance, depending whether you are in an uptrend or a downtrend. Okay, any reversal formation taking place at any other part of the chart, at any other junction of the chart, I will personally pay no attention to it, only if they happen at decision-taking areas. Okay, and those areas are of course the dynamic area of support and resistance, always in a solid trend, as in this case, as per my 3 moving average conditions, and always right off a confluence of different elements of support and resistance. Okay. All right, let's get down to business. Let's get our hands dirty with real charts. In this case, we are looking into the Australian dollar against the Japanese yen on the 4-hour time frame. And we have a beautiful uptrend, those moving averages nicely pointing up, parallel to each other, no crossover, price nowhere near the 100, etc., etc. By the way, I'm going to be focusing on this swing, okay, right there at that part of the chart, just so you know. We have also different elements around that area coming together. First of all, we have the we have a trend line there, okay. This trend line linking the linking this this swing low and the previous and the next one, also projected in time. The trend line comes around there. This area will work as support. But as usual, I always say that one level of support is not enough. You want to search for more of them. then you have 38% Fibonacci. As price retraced back, it slapped right to the pip the 38 Fibonacci around with the trend line right there, and all that it takes place around the dynamic area of support. We cannot use the previous swing low, okay, because it comes way too far down from there, and by that time, if price is to retrace back down to that level, it would have been way too close to the 100 for my taste, so I cannot use that level to add it up into the confluence. But nonetheless, we do have, like I say, a trend line. We do have the 38% Fibonacci retracement, and of course, as usual, the dynamic area of support. Okay, so we have few elements coming together, forming a cluster, a congestion of different elements of resistance. And now it's time to zoom into the setup chart in order to spot a possible 1, 2, 3 reversal formation, okay, or well, any type of reversal formation, but in this case I want to focus on a 1, 2, 3 formation. Okay, so since the setup chart is the 1 hour time, is the 4 hours time frame, I'm going to be zooming into the 1 hour time frame to search for those reversal formations. Okay, I'm going to mark this on a with a vertical red line, so now when I zoom in I can spot it as I scroll through my chart. There we are. Okay, there we are. Right, as we can see here, what we have is the retracement part. All right, the retracement part of this the retracement of this previous impulse in the direction of the main trend. Remember that the main trend was to the upside. So basically, and we had our level of confluence of support around this level. Okay, so as I was saying before, price retraces back, slaps that level. Okay, from there it turns around. Okay, it's normal to see some quick very short-term reaction of that level. Okay, price reacts of that level, bounces to the upside. The bears still try to unleash another attack to that level. Okay, to this level that was our main level of defense. Okay, of the support. They just cannot take out this previous low. In fact, they make a higher, you see, a higher low. Okay, and we effectively have our 1, 2, 3 formation as the entry would given right as the pullback aspect, as the aspect number 2 is taken out to the upside after the aspect number 3. Actually, let me draw that. This is the aspect number 1. The first attacked, then we have the bounce of, the bears in this case have rejected, the bulls have rejected the bears at this point, and therefore creating the aspect number 2 of the 1, 2, 3 formation. Finally, we have the third aspect, the third attacked by the bears onto that level of support. That's the aspect number 3, and as the aspect number 3 fails to make new lows, okay, and as price retraces back, going above the aspect number 2's high, right there is where we trigger our long entry in the direction of the main trend. This is an indication. Okay, as you can see, it basically shapes up as a W formation, as a tiny W formation in the short time frames, so small that probably we wouldn't be able to spot the W formation on the setup chart, but it's rather clear on the trigger chart. And as we trigger, as we take out the aspect number 2, as we make new highs, our long entry is given. And well, as you can see, like I say, the entry will be given right there, and after a little bit of hesitation, well, the trend and the reversal formation, finally claim victory. And like I said, after a little bit of hesitation, price and the trend does the rest of the job for you, pushing price in your direction. Okay, once again, we have 3 aspects. Let me recap real quickly. On a 1, 2, 3 formation, we always try to picture the W formation. All right, you have the first attack, that's the aspect number 2, the attack onto the level of support, then the bears are rejected off that level. Yet again they try one last time. Well, by the way, this rejection would be the aspect number 2. They have one last attack being the aspect number 3, and as it fails, okay, and as it turns around, forms that W formation and takes out the aspect number 2, a few pips above is where we trigger our long entry, 2-3 pips above, whatever. Right there is where we trigger our long entry, and well, a price moves in our direction. The stop loss on a 1-2-3 formation is below the low of the last attack. Okay, we have aspect number 1, aspect number 2, aspect number 3. All right, as we take out the high, that's our long entry. That's terribly drawn. Anyway, long entry right there. Okay. Well, the stop loss is 2-3 pips right below the aspect number 3. That's our stop loss. Okay. Basically, if we acknowledge this attack, okay, as failed, once the entry is given, the whole setup will fail. I mean, if this reversal formation is to fizzle out, the indication that the actual, that the setup as a whole has fizzled out is when we actually take out this low, therefore making new lows and therefore making another attack to the all-time low, which is the aspect number 1. All right, so always remember, entry as you take out the the high of the aspect number 2, stop loss few pips below the low of the aspect number 3. Okay, that's entry, that's stop loss, strength is to the upside, and well, bam, there it goes in our direction, okay, because we spotted a reversal formation, a W reversal formation, right off a level of support in an uptrend. This support held, we got our entry in the shape of that reversal formation, and we are effectively trading a whole new impulse to the upside. In fact, if we go back into the 4 hours time frame, into our setup chart, this is the very tiny W. You see that W formation? You can barely see it on the setup chart. That's why it's important to zoom into the trigger chart. This is the hesitation I was talking about before, and there it goes, the whole new impulse in the upside. Just as this retracement gave way to a new impulse, well, this retracement, upon a little bit of hesitation, like I say, bang, it went up. Just as once again we get the retracement and whole new impulse in the upside. Okay. Important to always keep in mind that the 1-2-3 formation is not enough in itself. Okay, we must now require a second condition to the 1-2-3 formation, and that is that the retracement trend line gives way at some point somewhere in between the 1-2-3 formation before triggering our long entry. Let me go back actually to the trigger chart in order to show that properly. If there it is. This is the 1-2-3 formation we were seeing before. Okay, the retracement trend line, like I say, it's gonna give way before triggering our entry. That's important, guys. Okay, we have two retracement trend lines here. Well, one here, it's indeed very steep. It's so steep that actually, it's very difficult to draw. But then we have a second retracement trend line right there. Okay, a retracement trend line is basically every short-term trend line in the trigger chart that we can draw against the main trend, meaning that if the trend is up, if the main trend, meaning in the setup chart, is to the upside, any short-term trend we may draw on the trigger chart against the main trend, that's going to be our retracement trend lines. Okay, and we want those trend lines to give way before triggering our long entry. All right, it's important, guys, because the breakout of the trend line is the actual confirmation that it's the actual confirmation that the 1, 2, 3 formation is carrying through, okay, is delivering what we actually want to achieve with it, which is basically confirming a change in the price direction over the following days, minutes, whatever time frame you are trading. In this case, like I say, we have this retracement trend line. Also, we have this one very, very steep. The retracement trend line may happen between the aspect number 2 and 3, or between the aspect number 3 and the actual entry. Both scenarios are equally valid, okay? Let's assume we have a downtrend, okay? A down retracement trend line. The main trend is up. So as price bounces back down, we have one last attack to the let's assume we have our area of confluence of support around there. Price reacts off that level, bouncing to the upside. We break the trend line. The bears unleash another attack. They fail to make new lows, and from there we trigger our long entry. Okay, you recognize this already. This is the aspect number 1. Aspect number 2. This is the aspect number. And as we take out the high of the aspect number 2, that's our long entry, and few pips below the aspect number 3, right there, that would be our stop loss. Okay, so in this case, the trend line breakout happened between the aspect number 1 and aspect number 2. All right, that's very clear. You have a retracement trend line, the aspect number 1, as it bounces, as it reacts off that level of support, it simply breaks through the trend line. Okay. From there, like I say, the bears unleash another attack, but the trend line is already broken. At the first signal that this aspect number 3 is failing to take the aspect number 1, and therefore failing to breach the confluence of support, as the failure does happen, okay, right there, taking the high of the aspect number 2, okay, we can confirm, okay, we can verify that the retracement as a whole is finished, okay, and that the 1, 2, 3 formation has carried through, okay, has actually confirmed its validity, and therefore upon the takeout of the aspect number 1, not aspect number 2, sorry, that's our signal to enter long, and few pips below the aspect number 3, that will be our stop loss. Okay, I know this is a little bit messy, okay, it's a little bit confusing, I know that, guys. It's just a matter of practice, really, okay, it's just a matter of training your eyes, scrolling back in your chart, trying to spot 1, 2, 3 formations right of elements, right of confluence of support and resistance, and always in the direction of the main trend. And as you train your eyes, you will see that you can you begin to identify them more quickly. Okay, once you, like I said, you train your eyes, you will look at the chart, you will see the retracement. If you see a 1, 2, 3 formation with a retracement trend line breakout at one point between the aspect number 1 or 2, or between the aspect number 3 and the actual entry, well, you know that you have a sound setup, always trading in the direction of the main trend, always up on a bounce of a confluence of support and resistance, and always with the confirmation being the 1, 2, 3 formation and the trend line breakout at one point somewhere in between the 1, 2, 3 formation. Okay, you know that you are trading a high probability trade because you are adding up chances on your favor. All right, all those different elements, trading in the direction of the main trend, the reversal formation, the bounce of an area of heavy, strong support and resistance, right off the dynamic area of support and resistance, etc., etc., will assure you that you are trading with the chances, with the odds on your side. Okay. All right, now. it's time to look or to study what a bearish formation, a 1, 2, 3 formation is, okay? We've just seen what a bullish 1, 2, 3 formation, remember the W formation to the upside, right off a confluence of different elements of support. Well, now we're going to be studying the inverted W formation right off different elements of resistance. Okay, it's basically the same thing, just the other way around, upside down, and I want you guys to and I want to make sure that you guys understand both ideas. All right. Basically, as we were seeing before in the previous example, in a downtrend, a price swings up and down, you know, like in any other trend, okay, and it has every swing is formed by two parts, the impulse part and then you have the retracement part, okay, impulse part and then you have the retracement part, and then a new impulse part, etc., etc., like any other trending typical price action, okay? Well, the bearish 1, 2, 3 formation, we've got to look for them at the tip of the at the end of the retracement part of the swing, okay? This being the retracement part, this being the retracement part, etc., etc. You search for them at the end of the retracement part of the swing, always in the direction of the main trend, and right off different elements of support and resistance coming together in order to search for a short entry joining on this trend line, okay, in this case to the downside. I'm gonna be focusing on this swing right now. Basically, I will right now I'm gonna explain the theory of a bearish 1, 2, 3 formation as the retracement goes up. Okay, as the retracement goes up in the short time frames in the trigger chart, right to our level of confluence. Okay, it slaps on it. There are two chances: either it breaks up to the upside, it basically pays no attention whatsoever to our last line of defense, or at least our strongest line of defense. If it pays no attention to it, if it breaches right through, okay, if it breaches right through nearing the 100, etc., etc., you know what to do. You simply take no entry. You cancel the whole setup, okay? If instead this being our level, okay, our level to keep an eye on, price retraces back, slaps to it and respects it, okay, we find resistance of that level, price thrusts down from that level, and still the bulls have a little bit of energy left, a little bit of momentum left to unleash another attack, but they fail to breach, okay, or even they fail to take out the previous swing high, and from there they basically collapse. Well, that's a successful bearish 1, 2, 3 formation, okay? As usual, we want a retracement trendline breakout at one point, okay, either after the one, between the 1 and the 2 aspects, or between the aspect number 3 and the actual entry, okay? This being the short entry, this being our stop loss. Just basically the same thing as a bullish 1, 2, 3 formation, but upside down, since we are now looking into a downtrend, okay? Don't you worry, guys. Now I'm going to be showing you a real example of a beautiful 1, 2, 3 formation that, sure enough, it netted some profits. In this particular case, as I was saying, we are looking into the euro against the Canadian dollar, also on the 4-hour time frame. I was, like I said, I'm going to be focusing on that swing, because it's a prototypical bearish 1, 2, 3 formation. First of all, we study the different elements of confluence of resistance that we have. We have this downtrend, okay, linking the top of the trend with the previous swing high, and well, we project it, and all this area around here is meant to work as resistance, okay, like in any other trend line case. All right, so we have one element around there. What else do we have? Well, let's draw some Fibonacci's as usual. It's overshot a little bit, the 38, right between the 38 and the 50. Nonetheless, as you guys know, I treat the area between the 38 and the 61 as an area of resistance. I don't really pay that much of attention right of those lines, right to the level. If it's to the level, I mean, if it slaps the Fibonacci retracement right to the pip, well, you know, great. But I consider that the whole area between the 38 and the 61 is a whole band of resistance. In this case, we are in a downtrend. So that's another element in our favor. Furthermore, what we have is these previous levels of oops, sorry, 1 second. There we are. Okay, these previous levels 1 second. Okay, there we are. These previous levels of support, okay, and now turned into resistance. All right, previous support, price found support at this level. You know, you see this area of congestion. Once broken and retraced, it found resistance of the previous level. That's 3 elements already. And well, finally, of course, as usual, I have my lovely area, dynamic area of support and resistance, which as usual marks the border of what a healthy trend is. Anything below the this area means that we are in a trend, we are still trending. Once price breaches above, it means that the trend is endangered. Okay, so as you guys know, I like price to react of this area to the downside. Okay, so we definitely have few elements coming together at this level. Okay, price has retraced back to it, and well, it's definitely a decision taking area. So I was saying, many different elements of support and resistance. Price is bound to react in one way or the other onto those levels. Either it breached through and the bulls will get strengthened as a result, or it will bounce down of it, and you know, the bears on this market, the people wanted to enter short, they will see their this signal of weakness, and therefore they will rejoin short, and price will regain momentum to the downside for a whole new impulse, just as we saw here, and well, you know, we now see here. Okay, now zooming into the shorter time frames, we've determined that price retraces back to that level. The 144.00 level is basically a level of resistance. We are now nearing that level as price retraces back, and we want to analyze in the short time frames what's actually panning out there, what's panning in the very real time, in the very short time frames on our trigger chart, in order to determine whether we we want to enter short, or whether price is actually not showing any weakness at all and is in fact breaking through. Okay, so for that matter, we zoom into our trigger chart. Let me mark this area with a vertical line. Now we're going to the 1 hour time frame, which will be our trigger chart for this case. There we are. This is the area. Okay, so as we established on the setup chart, this area is packed with different elements of resistance. Okay, this is the area we don't want price to breach through. We want price to slap to it, retrace back to it, you know, bank clash onto that level, and from there begin to curl around into the downside. Okay, if that happens, we will be searching for our entry. In this case, obviously, since we are talking about 1 to 3 formations, I'm going to be showing you a prototypical bearish 1 to 3 formation. I'm sure you guys already see it. I'm sure you guys already see the inverted W, don't you? You already see the inverted W, or actually an M formation. Why call it the inverted W if we can call it M formation? So yeah, the bearish 1 to 3 formation, like I say, it's some sort of an M formation with the second part of the second half of the M not quite taking out, not quite reaching the previous swing high, the previous half, the first half of the M formation. It's basically a leaning M, okay? It's some sort of a leaning M, something like that. The 1, 2, 3 formation, in fact, it actually may work as a double top, okay? That's perfectly valid as well, as long as the second portion of the 1, 2, 3 formation, of the M formation, or W formation, if we are looking into a bullish 1, 2, 3 formation. The second half, as long as it doesn't take out this high, the previous half of the price pattern, we are good to go. It doesn't matter whether it's a leaning M or it's a straight flat M, meaning a double top, etc., etc. Okay. As long as the second attack by the bulls, meaning this attack, fail to take out the previous one and therefore fail to breach our area of resistance, we are good to go. All right. Well, in this case, we have price retracing back, hitting that level. Price reacts off that level, bouncing down. One last thrust to the upside. That thrust also fails, and from there we take out right there. We take out the low of this being the aspect number 1. This being the aspect number 2, the last attack being the aspect number 3. As we take out the low of the aspect number 2, as usual, a couple of pips below, we trigger our short entry. Stop loss, just as we determined on the bullish 1, 2, 3 formation, right few pips beyond the aspect number 3. That would be our stop loss. This would be our entry. And well, as you can see, price decides to create a new impulse to the downside. Okay. But I don't want to focus on that. I want to focus on the 1, 2, 3 formation right here. Okay, right at the tip of the retracement part. Also, it's worth to notice how both trend lines, okay, both retracement trend lines, the one between the aspect number 1, okay, and the aspect number 2 has been breached, and also the one between the aspect number 3, okay, and the actual entry has also been breached. Remember, 1, 2, 3, we have one first trend line linking this, the low of the retracement, meaning the whole swing low, with the next low. We form the first retracement trend line. That one is breached. Then we have the last attack by the bulls, okay, the last thrust, the aspect number 3 of this M formation, of this bearish 1, 2, 3 formation. That one also fails to take this level, and from there we make new lows, breaking also the second retracement trend line. Once the second retracement trend line is taken, and once the aspect number 2 it's taken right there, that's a very clear, that point, that level, it's a very clear level to enter short, okay? Because, well, you have many factors on your side, as I was mentioning before. You have the downtrend, you have the bounce of an area of resistance which is holding price below, okay? That's already 2 elements on your favor. Moreover, you are getting a reversal M formation, okay? Reversal M formation being confirmed by 2 retracement trend line breakouts, okay? That's your confirmation, that's your entry signal, and your third element to add on the on the green lights, okay? You're basically getting many elements on your side, adding up, stacking up chances, odds on your favor, and well, you score a profit. Entry, stop loss beyond the aspect number 2, and well, there you go, whole new swing to the downside. If you're trading in a clear downtrend, as we saw on the 4 hours time frame, there are high chances that up on the signal, okay, signal came right there, up on the signal, the retracement trend lines breakout, the 1, 2, 3 formation, the bounce, okay, of the different elements of resistance. Well, you enter there and you're gonna score new profits. It's a high probability setup, okay? Well, okay, guys, I hope you've enjoyed and understood, most important of all, that you've quite understood what a 1, 2, 3 reversal formation is. Okay, it's basically search for those informations for a bearish 1, 2, 3 formation or a W formation for those bullish 1, 2, 3 formation. Okay, remember, entry as the aspect number 2 is taken, stop loss few pips beyond the aspect number 3, right there, and always in the direction of the main trend, and always right off an area of heavy confluence or heavy support or resistance if you are in a downtrend. Okay. If you have all those elements on your favor, if you work them out together, okay, and you wrap it up, you have a sound trade plan, you get your information, okay, in this case we have the information, the bearish 1, 2, 3 formation, you are riding a high probability chance, a high probability trade. You're going to be scoring a winner 65, 70, 75, 80% of the times. The trend is going to be creating a new impulse in the direction of the trend. Okay, you do your homework, you do it properly, and you will be able to squeeze some profits out of a new swing. Okay. Alright, guys, that's all for this video. As usual, if there is first of all, I recommend you to now scroll back in your charts, try to find those trending scenarios, try to find those 1, 2, 3 formations of areas of confluence of support and resistance around the dynamic area, and always in the direction of the main trend, and check it out by yourself. Train your eyes, get accustomed to them, because they work. Okay, they do work. I use them very often on my daily trading, and they work. Okay, so like I say, train your eyes, search for them, get accustomed to them, and you'll be able how they can become a very, very useful tool on your arsenal. Okay, in order to ride new swings, to jump on board on new swings that may be springing off on a clearly trending chart, okay, in a clearly trending market. Alright, folks, that's all for this video. Any doubt you may have, any question, please feel free to send me an email. I will very gladly answer all your questions, okay? Alright, folks, I'll be seeing you. Hi guys, this is Hector. Today it's Monday, the 10th of December 2007. It's 35 minutes past 1 p.m. London time. 38 minutes past 1 to be exact. I've just triggered a long entry on the New Zealand dollar against the Canadian dollar based on on a setup on the 4-hour time frame. It was one of the setups that I was following today. And well, it's basically triggered along, and let me try to explain the reasons of why I've taken this entry, and all the elements that are I'm seeing on my charts. Okay. All right. First of all, like I said, this is a 4-hour time frame. As you can see, all the moving averages are nicely pointing up, parallel to each other, etc., etc. No crossover whatsoever. Price nowhere near the 100 moving average, etc., etc. The type of price action I like to search for myself. All right. This is what had been going on last week, a nice push up in the direction of the trend. Basically the New Zealand dollar was strengthening against the Canadian dollar. Then as of last Friday we saw a retracement back to former support, but support levels. We have the dynamic area of support, which is the area between the 30 simple moving average and the 50. We have this previous swing high right there working as formerly as resistance. Now let me clean up the chart. This is the previous swing high I'm talking about, the former resistance, now working as support. We also have the 0.7750 round number. Also we have the 50% Fibonacci retracement right there as well. And well, of course, the dynamic area of support, as I was saying before. Now zooming into the trigger charts, as I was saying, after having retraced back to that confluence of support around the 0.7750, then zooming into the 1 hour time frame, what I'm seeing is a bounce of that area. Alright, so this is the retracement last Friday, as I was saying, basically we found support of that 0.7750 area, then we push back up from there. We found a little bit of resistance right there as the London market opened. We came back down, but we could not take the previous high, the previous low, this low I'm talking about, okay? Basically up on the final low, price bounced up off that level of confluence of support I was mentioning before. We found a temporary resistance at the retracement trend line. From there, the bears unleashed another attack to the lows of the day, the 0.7750, the key level to keep an eye on today. We could not take this previous low, as I'm saying. You see, we are making a higher high, higher low, and well, from that we broke the retracement trend line. We broke the reversal formation. This is a 1, 2, 3 reversal formation, by the way, guys. 1, 2, 3, and off it goes. All right, 1, 2, 3. And off it goes, breaking the retracement trend line, breaking the aspect number 2. Okay, this the W formation midpoint right there. This is a bullish reversal formation, by the way, guys. All of you guys who are not familiar with this formation, this is a reversal bullish formation, okay, right off an element, a confluence of support, and well, we have the inverted W, the inverted M or W or 1, 2, 3 formation, whatever you want to call it, with a trendline breakout right off the confluence of support in an uptrend, as we've seen on the 4 hours time frame. So I'm basically long, effectively long in this trade. I think I have a few elements working in my favor. I believe I have the odds in my side, in well, I've triggered my long entry at 0.7817. all right, stop loss as usual placed down here below the last pullback. I'm gonna take half of my position out at the previous swing high, 0.7884, which actually comes around the average daily range for this currency pair very nicely. All right, we are gonna be hitting the previous swing high just as we meet the average daily range for this currency pair, and that's always nice to see. To scale out a little bit of your position and move stop to break even as the average daily range and previous levels of resistance are met, in order to offset a little bit of risk on this trade. And from that, if the trend is to continue, I'm gonna take my second target, my second part of the trade, right before hitting the 0.8000 round number, okay, just in case we find a temporary resistance of that very round number level. Actually, if I go back into the 4 hours time frame, and well, basically I measure the previous swing distance, okay, and I add it to the tip of the retracement. It takes me all the way up here, okay, right up there to the 0.8030 level, but like I said, we have the 0.8000, very strong, very a round number, and I've decided to I'm gonna decide to place my final exit order before hitting that level. In my opinion, it's not worth to try to squeeze. Actually, let me stretch out a little bit the chart so you see that better. In my opinion, there is no point in trying to squeeze out these last 30 pips, okay, in this whole move. I'd rather be conservative with my targets, exit out a little bit before that round number, the 0.8000. By that time, the previous swing high, or the previous swing distance from low to high, added to the tip of the retracement, would have already almost having been met. Okay, like I say, I'm just giving up on a very small portion of that projection, and anyway, I don't see the point in being greedy. So once again, let me repeat my levels. Entry level, actually perhaps you can see that better in the hourly time frame. There it is. Entry level, once again, 0.7817. Stop loss level 0.7766. First target right there, right above, below the previous swing high at 0.7884, and final target 0.7995. As I was saying, few pips before hitting the next round number. Alright guys, as usual, I will be keeping you updated on this trade, okay? Bye bye. Hi guys, this sector, one quick update on this trade that I have opened on the New Zealand dollar against the Canadian dollar. Just to let you know that I've closed half of my lots out a couple of pips before hitting the previous swing high. As you can see, we are going through a little bit of a retracement. This is very typical market reaction, and that's exactly the reason as of why I like to cash my few pips out of the trade as I hit the previous swing high. Sometimes, when the swing hits the previous swing high, well, many traders, such as myself, at the end of the day, I'm doing this very same thing myself, like to close out a portion of their trades, and therefore price is bound to react a little bit off that level, right? Anyway, like I say, I've taken half of my lot size out for plus 62 pips. Stop has been trailed to break even right there, and well, I'm gonna let the second half of the trade run to either its final target, or, well, until I am stopped out at break even, like I say. Alright folks, whatever the outcome is, I will keep you updated. Bye bye. Hi guys, this is Hector. Today is actually, it's been 2 days I had this trade open. Today is the 12th of December 2007. If you remember, 2 days ago I opened a long trade on the New Zealand dollar against the Canadian dollar right there. I took half of my position out there. It retraced back almost to stop me out at entry levels, but from there, thanks God, price today has been moving up, and it's finally hit my final target for plus 165 pips on the second half of the trade. Alright guys. Hi guys, this is Hector. Today is the 16th of May 2007. It's about noon London time, and I'm considering a short entry on the sterling pound at the 4 hours time frame. First of all, I must say that this is a risky trade, okay? It's a trade with it's not that orthodox setup, okay? I'm seeing some different technical analysis factors that I do like. However, this is not what I would consider a conservative trade, alright? Okay, first of all, let's have a look at the daily chart. I'm seeing a trend line break right there, you see, broken with momentum.
quite a heavy momentum actually last week on the way down. You see now we are retracing to the way to the upside. Okay, actually we can see that better on the 4 hours chart. Let's zoom into the 4 hours chart. There we are. Last week we broke with momentum on a massive almost 200 pip range day, the breakout of to the upside that we saw on the daily chart. Okay, now after that breakout to the downside, we've just gone through actually yesterday with the retracement part of the swing down. We've banked onto the 50% Fibonacci, also last week's low right there. Okay, this level's been working. This is a level that's been working as a support and resistance, two of them actually. First one is this one. Okay, previous week's low. I'm hoping it to work as resistance today, and moreover we have this level. Alright, let me draw that properly. This level, the 198.50 round number level, right there, and now working. It's been working as an intraday resistance. Sorry, it's intraday support. We've broken below that level. We are now going through the retracement part. Let's zoom into the 1 hour chart for a clearer view. There we are. Okay. That level, the 198.50. Working as resistance there, working as support now, being broken, being retested, and I'm looking into continuation of the move to the downside. Okay, we are seeing an M formation. It is one of the reversal formations I tried, especially. It's like I always say, reversals are not about the formation in themselves, but where in the chart they actually happened. That's why I zoom into my setup chart, which is the 4 hours chart. You can see that it's banging onto the dynamic area of resistance. Moving averages all pointing down. Okay, more or less parallel, a little bit snaky as you can see. Moving averages parallel to each other, all pointing down, a little bit snaky, to be honest. That's why I'm saying it's a rather risky trade. It's not very conservative. Okay, there is a component of a higher component of risk in this trade that I usually take. Anyway, this setup is taking up, is developing. Right off the inner channel. Okay, there is an inner channel in the 4 hours time frame. There is an outer channel up there, an outer trend line. There is an inner trend line, and this reversal formation is happening right off it. Okay, like I said, also off the week's swing, 50% Fibonacci, previous swings low, former support now working as resistance, etc., etc. So I am liking this setup. Okay, I'm liking the short entry, which of course will be triggered as I begin to make new lows for the day. The stop loss will be placed above the round number 198.50, and my target price, I'm gonna use the average daily range, which is one of my techniques as far as establishing my price targets. The average daily range for the pound, it's in the last 100 days, it's been about 120 pips. Today we've moved 48 pips. Okay, so from here to here there's been 48 pips, and since the average is about 120 pips, I will add 120 pips from the high of the day, 198.70, which will take me to 197.50. Alright, which is, I like this target, is right at previous level of support, also the round number. I will just place it few pips above, and hopefully throughout the day we will sink all the way down here. Alright, I will I will keep on updating this video as soon as well, either we get an entry or I get an entry right there, or price keeps on shooting up and this level not working as the resistance that I'm hoping for. Okay, I'm hoping for this formation. All right, M reversal formation, breakout, retest, and continuation of the move to the downside. Trigger, stop loss, final target. All right, guys, bye bye. Hi guys, just a quick update. I've entered into the trade 1 minute ago. It seems like it's falling down in momentum. This is my entry, alright, 198.24, and well, I will keep on updating how this trade develops over the morning. Alright. Hi guys, this is Hector. One final update, just to let you know that I've just closed my trade. It's for plus 55 pips. It's been about 5 hours onto this trade. Currently the day range for today on the GBP USD has been 108 pips. The average for the day is 119, so we are about to hit the average daily range. I've just closed it. Like I say, for plus 55, I'm gonna call it a day, and I'm going out to enjoy the rest of my day. Alright guys, bye bye.
Hi guys, good morning. This is Hector. Today is the 11th of October 2007, Thursday. 40 minutes past 8 a.m. London time. I've just sent actually my mailing list to the guys. I mean my setups to the guys on my mailing list this morning about 15 minutes ago, or something like that. The London market has just opened, and I've just triggered a short entry. I'm gonna try to explain what I'm seeing in my charts. Is one of the setups that I was telling the guys about. Okay, it's on the euro against the New Zealand dollar of the 4 hours time frame, which is the chart you're seeing right now. Okay. I was telling them how price upon the last swing, okay, this swing I'm talking about, not this one. This one was the previous one. Upon having broken, okay, the previous swing low, came back to retest it, and of course also the dynamic area of resistance. Along with the 50% Fibonacci, etc., etc. It's a very nice level of support, of resistance. Okay, with different elements coming together within few pips. Also, let me zoom in a little bit. I was also telling the guys that we were seeing a number of dojis on the 4 hour time frame. Okay, have a look there. We have 1 doji, 2 dojis, 3 dojis. All right, and that when you see a doji on the setup chart, or any time frame actually, it usually means, if you zoom into the shorter time frames, a congestion area or an area of decision taking. Okay, whether it be a range or a triangle or whatever, it means basically, like I say, an area in the shorter time frames that's moving sideways or it's consolidating. Okay, so and I was telling them that I was basically waiting for a breakout to the downside, okay, in order to trigger my short entry as soon as I find my reversal formation confirming that this level of resistance, as like I was saying, the previous swing low, dynamic area of resistance, the 50% Fibonacci level, etc., etc., is actually holding the retracement. All right. So if we zoom now into the 1 hour time frame, which is the one that you are seeing right now, let me zoom back out a little bit. Right there we are. So let me draw the reversal formation I'm seeing here. Okay, yesterday as I was recording this video, we were only having this formation. All right, this formation. Do you remember that, guys? You can go watch yesterday's video if you want. All right, we have this this trend line. Okay, I was telling the guys that we had actually, let me draw that properly with an actual trend line, because otherwise it's a mess. All right, I was telling the guys yesterday on the video, you can go watch yesterday's video uploaded on the blog, that we had two trend lines. All right, one was the aggressive one, and I mean the inner one, and one was the outer one. This of course being the outer one, and this being the inner one. All right, therefore what I was basically, of course, first of all, I needed a retracement, the first trend line to give way. Okay, yesterday video I recorded when I finished my when I was actually recording the video, current market price was around there, so we were only having this formation. All right, with the first trend line about to give way. Okay. That was the first that was where the chart was yesterday evening. All right, now this morning, what we are seeing, it's a clear head and shoulder formation. Okay, left shoulder, the head, the right shoulder, the neckline right there. You see the neckline there, the retracement trend line breakout. Okay, the 185 level being broken. All right, it's the level that was working firstly as resistance there, then working as support. Okay, which obviously means that this is a very valid, very significant neckline for this head and shoulders formation. Let me actually zoom in a little bit for a clearer for drawing that head and shoulder better or more clearly. Left shoulder, head, right shoulder, neckline, breakout of the neckline, breakout of the first trend line, and we are now just breaking the second trend line. But nonetheless, I didn't pay too much attention to the last trend line, because we had already broken the first trend line, and we had already gotten the reversal formation I was seeking for. Right, so I basically entered short as the neckline gave way. Okay, and that's basically the trade I am in right now. Okay. Entry price, let me clean up the chart a little bit from so many lines, since they have already been broken, all of them, so no point drawing them. First target will be, as usual, the previous swing low. All right, the stop loss 185.45. Sorry, entry price 184.90. And my first target, like I said, is going to be the previous swing low right there, 183.70. And the second target, if we go back into the 4 hours time frame, this is going to be my final target right there at 181.50 down here. Okay, so this is entry, this is stop loss, this is first target, this is second target. Hi guys, this is Hector. One quick update to let you know that I've closed half of my position out as planned for plus 115 pips on this trade that I have open on the euro against the New Zealand dollar of the 4 hours time frame, which is actually good, because now I can safely move my stop to break even. And well, it's very nicely timed, because well, it's 10 minutes past 5 p.m. London time, and at this time I usually finish my trading shift. So you know, it's always nice to be able to step out of the trading desk knowing that you know, you've pocketed some profits for the day, and that your stop loss on the second half of the trade is safely moved to break even. All right, guys, I'll keep you updated on whatever happens on the second half of the trade. Okay, bye bye. Hi guys, this is Hector. It's Monday, 40 minutes past 8 a.m. London time. If you remember, last Thursday I triggered a short entry on the euro against the New Zealand dollar of the 4 hours time frame. Price Friday went all the way down to 182.50, but it seems like it's retracing back up hard on the first half of well, as the markets have opened for today, Monday, and I don't want to give all these pips. They are, well, 250 pips on the table, and I don't want to give them all back to the market on a possible retrace, as we are seeing some retrace now there. So I trailed my stop down here from below this double bottom, which has been stopped out right there about 15 minutes ago. I still believe in this downtrend. Okay, I still believe that we may get, you know, this retracement might be over soon and then continue to the downside. But like I say, 120. I've made 120 pips on the second half of the trade. I made 115, by the way, on the first half of the trade. Like I say, 120 pips is just too much. You know, too many pips to give them back to the market. Okay, so that's why I decided to trail my stop down, like I say, right above this double bottom there at 183.50. All right, guys, that's all. Remember, this trade was taken last week, but I couldn't upload it on the blog because, well, it wasn't. It hasn't been closed out until, like I say, barely 20 minutes ago. All right. Okay, folks, that's all. Bye bye. Hi guys, this is Hector. Again, it's once again 17th of September, Monday, 2007. 14 minutes past 4 p.m. London time. I've actually just stopped finished recording the video on my other trade that I've taken today, which was the USD against the Canadian dollar, which ended up in a minus 17 pips loss, unfortunately. Just wanted to comment that I've triggered another entry on, in this case, on cable, as I told the guys in my mailing list this morning. The GBP crosses were the other setups that I was looking, the other currency I was looking to trade other than the Canadian dollar. Okay, and in this case, it's been the cable that's showing a beautiful. Let me show you guys on my chart right now what I'm seeing. You see that beautiful 3 simple moving average formation. Okay, it's all of them are definitely parallel in order, pointing in the same direction, etc., etc. And you know, every swing taking off the dynamic area of resistance. All right. We've seen throughout the first half, actually most of the London session, it's seen a retracement back to the dynamic area of resistance, which is what I was actually waiting for. Okay, and well, now we've just seen the breakout of the retracement trend line. Okay. It's a very typical setup that I tried. Okay, once we retrace back to resistance levels and we break the retracement trend line, I search for my 1, 2, 3 formation. All right. This was the 1, 2, 3 formation. I had my sell stop order a few pips below the 20000 round number. Very psychological level of resistance and support. Okay, as usual, and well, it's my sell stop order has been triggered up on the 1, 2, 3 formation. Stop loss as usual above the pullback thrust. First half out at the let me zoom back out into the 30-minute chart, into the setup chart. This is an intraday trade, of course. First half out at the previous swing low 199.55, and I will exit half of my position out and move a stop to break even at that level, and then the next portion of the trade is going to run to the or I will hope I hope it will run until the next round number at 199. I will exit a few pips above as usual. Alright, so nothing very special on this trade, very typical swinging formation. Okay, that's the type with a clear trend line. It's actually a clear channel. Okay, let me show you on the chart the clear channel. Okay, right, oops, it's not properly. There you have it. Okay, that's the channel I'm looking to try it. Okay, retracing back up to the moving average formation, to the dynamic area of resistance, to the top end of this channel. Okay, and aiming for the well, firstly the previous swing low, and then the bottom of the channel. Right. Okay, guys, I'll keep you guys updated. I think it's a good setup. Okay, I think I will, if nothing goes wrong, I will recover from the 17 pips loss that I have scored on the Canadian dollar. Well, nonetheless, like I say, as usual, I will keep you guys updated. Okay, all right, bye bye. Hi guys, this is Hector. A quick update. It's 47 minutes past 4 p.m. London time. I've taken half of my lot size as planned at the previous swing low before reaching the 199.50 round number. The second half of the trade, the second half of my lot size is still in this trade, and the stop loss is moved to break even. All right. Anyway, plus 42 pips on this first half of the trade. Which is good. I've more than covered the loss that I had on the first trade that I had today, and well, now the second half of the trade is running in order to make, let's hopefully making some money for me today. All right. Okay, guys, I'll keep you updated. Bye bye. Hi guys, this is Hector. Another quick update just to notify that I'm moving the stop. I'm trailing my stop down here, okay, above the 199.15. The reason for that is that because, well, today we've moved way over the average daily range on the cable, and I will not be surprised to see a retracement back. Okay, price fell shy of my final target for about 10 pips. Once again, what can I say? And it seems like it's retracing back. I'm not gonna give all these profits back to the market, back to entry level. Okay, so there are two possible scenarios here. Price retraces back to the previous swing low, and the round number 199.50 finds resistance of that level, and then proceeds to well, to move on to my final target. Or well, like I say, price has already moved way over the average daily range for this currency pair, and therefore begins to retrace back into, as usual, the dynamic area of resistance, having completed a whole new swing down. I don't want to risk that. Okay. I am right now at plus 63 pips in profit. I'm not gonna give all those profits back for sure, so I'm trailing my stop down to 199.55 right there. Okay, I'll keep you updated. Bye bye. Hi guys, one final update. 6 p.m. London time. My trade on cable has been the trail stop has been stopped out for plus 42 pips on the second half of the trade. Yes, that's the same as in the first half. Alright guys, that was all for today.